You are listening to Charting Wealth for Tuesday, the 24th of January, 2017. S&P 500 down for the day 0.25%. We have been dragging sideways on the S&P 500 since about the 9th of January. And the market is starting to actually continue to trend down. What we're seeing on our two-day chart is we're actually seeing the PPO, the price percent oscillator, move even further down, and now the derivative oscillator is gaining down energy after losing that downward momentum. In fact, moving up as far as the energy went in the derivative oscillator up until about the 17th, and then it started building since that time. So we have a green spinning top. In fact, it's our 1, 2, 3, 4th spinning top that we have seen over the last 4 candlesticks representing 8 days. So what does that mean? Lots of indecision in the marketplace. Now, the weekly chart is still in a confirmed up move. Those of you who've already listened to our comprehensive review for the past week and the review for the coming week, we can see that it does look like the weekly chart is actually starting, well, it is starting to move down toward the signal line, signifying a potential crossover going down, but we'll continue to watch that. Those of you who are in any kind of up moves, as far as the broad market, the S&P 500 index goes, be careful because it does look like the market's losing that energy. Now, what do we see going on? Is there any trade here? No, there is not. We are trend following. We wait for the weekly and the two-day chart to be moving in the same direction. They are moving in opposite directions now. There is no trade on the S&P 500 for us. Let's move now on the two-day chart to the Qs. That's the Nasdaq 100. It continues to move up. It was up barely for the day, 0.07%. We currently are in a confirmed up move on both the weekly chart that crossed over back on the week ending, well, back around the 9th or so of January. And we had already seen a crossover way before, a good month or so before that, in the month of December, early December, around the 8th. That's when the two-day chart crossed over going up. So what are we waiting for? Well, we're waiting for our 2-hour chart to cross over going up. It has not done that for many, many days now. It actually got close back around on the 13th of January, and we have now seen it cross over going down on the 17th, and it's never managed. It almost did back on the 20th, but it never managed to push over. Maybe that's going to happen. Our derivative oscillator is still quite negative, but we do see what appears to be the PPO moving toward the signal line. Folks, our trigger to jump in is when we see a crossover going up on the PPO. The moves up for the day, although they were minor, 0.07%, but still above the two-day trend line. And if indeed we do have a crossover going up, that'll be our trigger to jump in. It is the most likely of the trades that we have pending. It is the only one we have potentially pending. So keep an eye on the Qs. Watch it every couple of hours on our 2-hour chart. Remember, our 2-hour chart signals at 10. You don't ever want to get in around 10. You let idiot hour pass. Once idiot hour is over, that's the first hour of the market. Then around 10:30, maybe you might see something more like noon. And then, of course, again at 2 and again at 4 is when those candles are drawn. And we did have up movement toward the end of the day via our Heiken Ashi type candlesticks. Okay, let's go back to our 2-day chart. So that's our most likely move for the week. Let's check out TLT. What is TLT? TLT is the 20-year Treasury bond fund. What do we see it doing? Well, it had crossed over on the 2-day chart. Weekly hasn't crossed yet. Crossed over on the 2-day chart, moving up back on the 27th of December. And we had some nice up movement until around the 17th. And over the last few days, the last 4 days, it started losing that momentum. Now, it was up 1% for the day, but that doesn't mean that we would jump in because we're still in a downtrend on our weekly chart. But we did see lots of strong up movement in the morning, through 2 o'clock in the afternoon, and then it petered off there at the end of the day. So until our weekly chart rotates over going up, we do not have a trade, and our weekly chart has not rotated over yet. It is trying to, and maybe we'll have something toward the end of the week when that can actually be confirmed. But continue to keep an eye on TLT. It may very well be offering us some trades very soon. But again, we see down candles over the last two-day candles, and we'll continue to watch and just see what we see. That's where we are as far as bonds go. Now, lastly, we're going to go and check out the 2-day chart on gold, which is up 0.67%. What do we see gold doing? Gold's in a confirmed down move on the weekly chart again. We're waiting for it to cross over going up. It tried this last week and managed to do so at the end of the week. And we are now looking to see what we can find in gold. Gold has now crossed over on a confirmed move during this new week. It's crossed over strong enough that we probably don't have to worry about it immediately recrossing. And when we look on our 2-day chart, what do we see going on there? Well, gold is in a confirmed up move. It's going to have to redraw our 2-day trend line. It did close above it, but it actually opened below it. Derivative oscillators losing some of its energy. And if we look on our 2-hour chart, we can see that as of noon, it crossed over going up on the 2-hour chart, then sort of started losing some of that energy later. Now, what have we been waiting for on gold? To see if our 4-hour chart is going to work for us. If we would have followed that chart jumping in on the 19th, it reversed itself, has not yet crossed over going up. Gives us some trepidations about really trusting that 4-hour chart. Folks, that's where we are as we end the day on Monday, the 23rd, as we go into Tuesday, the 24th of January. You have questions, problems, concerns? We are always happy to hear from you. We appreciate you joining us every day. If you don't know all the things that we're talking about, the best way to get started is go to the website chartingwealth.com, sign up for our newsletter. Guess what you get with that? You get with our How to Read a Stock Chart video. It's only 15 minutes and it is down and dirty, telling you what all of these things are about. From the MACD, that is basically another name for the price percent oscillator. It is calculated a little bit differently, but it works almost exactly the same way. We also explain our candlesticks, our Heikin-Ashi candlesticks. We explain the derivative oscillator. We explain our entire theory of trend following, how we wait for the weekly chart and the 2-day chart to be moving in one direction, wait for a pullback on the 4-hour or the 2-hour chart, and then once it crosses back over in the same direction as the big charts, then we jump in and look to make a trade. We look to take that easy, safe money out of the middle. Now, we're not a stock calling service. We're an education firm. We want you to practice with us every day. Just 10 minutes is all we ask. We also send with that sign up a daily market worksheet link where you can print out a bunch of those and fill them out by hand every day. I ask you to do that with a pen and pencil. Sometimes people are like, well, I like to do stuff on a computer. You need to write it down. It makes you think about it. It makes you draw the arrows. It makes you do the graphs. It makes you really consider what's going on. And you do it while you're listening to the podcast. So it's within that 10 minutes. So please do that. You need to do that every single day. It will supercharge your training. I can almost guarantee you that. Next, we also send you our layout from freestockcharts.com. It's the layout that if you see the videos, and I explain those for the folks listening on iTunes and the audio podcast, but if you see our videos and everything we talk about is also in video format, what you see happening there is us looking at the layout that we use at freestockcharts.com. We so appreciate you being with us. You appreciate what we do. We ask you to do a couple of things. First is go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us. Also, go to YouTube and subscribe to our channel. You'll get all the videos right there. We appreciate all of your comments, questions, problems, concerns. Great training at the website chartingwealth.com, all available free to you. Thank you so much, folks. God bless. All the best from chartingwealth.com.